So welcome back. I'm just going to reinstate this objective. We're going to project cash flows of a project via pro forma. In the last video we left at an example. Okay, an example with a lot of figures and a lot of numbers in forecasting cash flows through a pro forma. And now we're going to do all the numerical work and find out our cash flows for the next 3 years, since the project has a life of 3 years. So what we want to do first is create our pro forma, and it's going to look something like this. And we have sales, variable costs, gross profit, fixed costs, depreciation, EBIT, tax, and net income. We just want to put all of our numbers, all of our figures into a nice generalized statement that we can use to calculate all of these elements that are required to forecast our cash flow. So let's start with sales. What should our sales be? Well, we are estimated to sell 40,000 masks at $5 each. So it's 40,000 times 5, and that's 20,000. No, 200,000, sorry. Right? And what are our variable costs? Well, it's going to be $3 times 40,000, and that's 120,000. And so our gross profit is going to be 200,000 minus 120,000, and that's $80,000. Okay. Now, our fixed costs are $18,000. Now this is the figures for 1 year. So this is just for one particular year. If we have to make variations throughout the year, we'll do that, and I'll show you how that's done. So yeah, fixed costs were $18,000 as shown here. Estimated fixed costs are $18,000 per year, and depreciation is going to be $20,000. Why? Well, depreciation is going to affect only your manufacturing equipment, okay? And since this project lasts for 3 years, and since the equipment is assumed to depreciate 100% via a straight line basis, that means we're doing 60,000 divided by 3, which is 20,000, and that's going to be our depreciation per year. And so our EBIT, which is our earnings before interest and tax, is going to be our gross profit minus $18,000 minus $20,000, and that's going to be $42,000. Let me just make sure this is correct using the calculator. So it's going to be 18 minus 18 minus 20. Yep, that's $42,000. Good. Now we calculate the tax on our EBIT, because this is earnings before interest and tax. So to calculate tax, we just do 0.3 times 42,000, and that should be 12,600. And so our net income is going to be $29,400. Okay, and so this is a nice pro forma that we have, which describes the elements of our cash flow. Okay, so we have this, and now we can start saying, alright, how do I calculate all these elements individually? Well, we bring out this new sheet, and what this new sheet shows is a year, operating cash flow, and the change in net working capital, and capital spending. Now these 3 things are the elements required to find the cash flow for a particular year. Okay, so we're going to try and put these elements, the figures of those elements, into here and calculate the projected cash flow for each year. So operating cash flow. Okay, operating cash flow is going to be 0 today. It's going to be 0 today. Our change in net working capital is going to be minus $15,000. Okay, because today, what we've done, and I'm just trying to find the sheet, here we go. Today, net working capital is expected to initially be $15,000. Okay, so we've injected some cash into this project at a value of $15,000 in the form of net working capital. Okay, and it will not change throughout the life of the project, which means in year 1 it's going to be 0, and in year 2 it's going to be 0. I'm going to leave year 3 because there is something that I have to realize. Capital spending is going to be $100,000 in the first year, because $100,000 initial capital invested into the project to get it started. So that's some capital spending. Okay, good. Now, let's begin. So I just want to say that operating cash flow is 0 because earnings before interest and tax is 0, depreciation is 0, and taxes are 0. Because we're talking about initially. There's nothing to tax from. Earnings, we've made no earnings. Depreciation, we're at a starting point. There can't be any depreciation. So that's why this is 0. So in the first year, operating cash flow is going to be $49,000, $49,400, sorry. Okay, why is that the case? Well, let's look at our formula. Project operating cash flow is equal to earnings before interest and tax. Earnings before interest and tax is $42,000, so we have $42,000, and then we're going to plus depreciation. Well, depreciation is $20,000, so I'm going to plus $20,000. And then finally, I minus taxes, and taxes are $12,000, $12,600. And that's $49,400, which is the value that I put down here. So I just want to say that, notice how this is very useful in condensing all of our information into numerical figures, which we can easily use in calculating these two things right here. And so operating cash flow is not going to change throughout the years, because these 3 elements are not going to change. Okay? The next thing I want to look at is the change in net working capital in the 3rd year. So this is negative because the change was in a negative direction, in that we input $15,000 into our project. It doesn't change, but in the 3rd year, what we're going to do is we're going to close down the project. And so what happens to the $15,000 that was here? I know it's 0, but there are still $15,000 here, because just the change may be 0 doesn't imply that we have $0 in net working capital. Well, what happens is we just retain back our $15,000. That's what we do. We're getting it back. We're closing down the company, and so this remaining residue should come back to us. And that's why we add it as positive $15,000. In addition, salvage value is 0, which implies that we're going to have no other increments happening right here. Capital spending was stated to simply be $100,000, and there's been nothing else in regards to capital spending. So this is 0, this is 0, and this is also 0. So finally, I've put in all my values that were summarized here into this nice statement right here. And now what I can now do is calculate my cash flow for each year, because these are the 3 elements that were required to calculate the cash flow for a particular year. And so here I am, and so let's do it. The cash flow initially is going to be negative $115,000. My cash flow for the 1st and 2nd year is going to be $49,400. And for the 3rd year, my cash flow is going to be $49,500 plus $15,000, and that's $64,500. Oh, hold on, I've just done a bit of an error. 400. Okay, 400. And so that's that. We've just forecasted our cash flows for every year. Now, another question we can say is, alright, is this project worth taking? Well, what do we have to do? We have to calculate the NPV, don't we? Now, the NPV is just going to be equal to this. Now, we have no market rate, the market rate of return, so we're just going to leave it as X right now. Okay, and then we'd calculate our NPV. So for what the X was, we would sub it in. If NPV was greater than 0, then we know we're accepting this project. And if our NPV was less than 0, we know we'd be rejecting. And so that ends our lesson in forecasting a project's yearly cash flow. Okay, a lot of information. Your first thing should be to extract the information in a nice way so that you can put it in this pro forma statement. Then you want to be plugging in those numbers or these numbers into these formulas. But more ultimately, you want to plug it into this formula, which can be done very nicely here to calculate your corresponding cash flows. And that ends this lesson.